When I first started looking into trading, the idea of automating things was super appealing. I mean, who wouldn't want a system that could potentially make money for you, right? Even while you're doing other stuff.
Exactly.
But I quickly realized that for someone just starting out, it can feel like navigating a minefield. So many complex strategies, so much potential for, well, things to go wrong.
That's true.
That's why today we wanted to chat about an approach that aims to simplify things, especially if you're new to options and maybe thinking about using automation.
Yeah.
We're going to break down a specific rules-based strategy called our monthly trend service, which focuses on trading bull put credit spreads on the SPX.
That's the one.
Our goal is to give you a really clear picture of how this works and why it could be a potentially good starting point.
Exactly. We've seen a lot of people get, overwhelmed by the complexity of options trading, and the monthly trend service was really designed to be different. It's about taking a consistent, rules-driven approach to potentially profit from the S&P 500's historical upward trend using, a single manageable trade each month.
Okay, so monthly trend. Let's dig into the nuts and bolts. What's the core idea here?
At its heart, the strategy is based on the observation that the SPX, over the long run, has generally tended to increase in value. Yeah. So each month we enter into one $10 wide bull put spread.
Okay, now for those who might be scratching their heads at bull put spread, can you explain what that actually means in, plain English?
Sure. Think of it this way. With a bull put spread, you're essentially betting that the price of the SPX isn't going to drop below a certain level within the next month or so.
Okay.
You do this by selling a put option, which gives someone else the right to sell the SPX to you at a specific price, and then buying another put option at an even lower price. When you set up this kind of trade, you actually receive money up front. That's the credit part.
Ah, the credit.
Yeah. If the SPX stays above your higher price by the time the options expire, both of those options become worthless, and you keep the initial credit. It's a way to define both your potential profit and your maximum possible loss right from the start.
So you get paid a little bit up front.
Exactly.
Hoping the market stays relatively stable or goes up slightly.
That's the idea.
That makes sense. So we're getting a bit of income now with the expectation that the market won't fall too much in the next 30 days. And you mentioned that to ensure everyone using the automated system gets the same entry price, you use a limit order. Why is that important?
Well, a limit order basically tells our system to only enter the trade if we can get a specific price or better. This is crucial for consistency across all our users,
Right.
It prevents some traders from getting in at a significantly different price than others due to rapid market movements. It's about fair and even execution for everyone.
And the roughly 30-day time frame for each trade, why is that the sweet spot?
That monthly duration, it strikes a good balance. It gives the market enough time to potentially move in our favor, riding out some of the shorter-term ups and downs. It also means we're not constantly trading, which can, rack up commission costs. We're aiming for a consistent monthly income rather than trying to time the market perfectly every single day.
Now, risk is always top of mind, especially when you're just starting out. What kind of safety nets are built into the monthly trend strategy?
Absolutely. Protecting your capital is paramount. First off, we have a stop loss in place to automatically exit the trade if it moves too far against us, limiting potential losses.
Okay.
We also target a risk-to-reward ratio of 1 to 2. So for every dollar we're potentially risking, we're aiming to make $2 in profit.
1 to 2, got it.
And we strongly recommend that beginners start by risking no more than 5% of their total trading capital on any single trade.
Just 5% to start?
Yeah, exactly. For those who develop a bit more comfort, they might consider moving that up to 10%, but we always advise starting at that lower 5% level, maybe even waiting until after your first successful trade before thinking about increasing it.
That sounds really prudent. Start cautiously and scale up if you gain confidence. And I noticed a mention of compounding profits. How does that factor into this strategy?
Compounding is where the real magic happens over time. Basically, instead of withdrawing your profits, you reinvest them.
Okay.
So as your account balance grows, even if you continue to risk the same percentage, say 5%, the actual dollar amount you're trading with increases, which can lead to significantly larger gains down the line. It's like learning interest on your interest.
Right. This all sounds good conceptually, but I know what people are really wondering. what kind of results has this strategy actually produced. The numbers here are pretty eye-catching over 12 years of profitability with an average annual return of 54.25%. That's a lot better than just parking your money in the S&P 500.
It is, yeah. And that historical performance is based on that conservative 5% risk per month. What's also important for beginners to understand is the low-risk profile. The average annual drawdown, which is, the biggest dip you might see in your account in a year, has been only 9.32%.
Wow, so a drawdown of just over 9% on average, even with those impressive returns, that suggests a relatively smooth ride, right?
Yeah.
And the fact that there have only been 3 instances of consecutive losing trades since 2013, that's quite reassuring.
Exactly. It speaks to the consistency and reliability of the strategy over a significant period. And for anyone who's a bit skeptical, we actually have publicly available data that verifies all the trade entries and exits for our SPX auto trading at that 5% risk level based on a hypothetical $100,000 starting balance.
Ah, okay, so people can check that.
Yeah, definitely. We really want people to focus on those consistent annual gains rather than getting too caught up in the day-to-day market noise.
And it's fascinating to look at the year-by-year comparison with the S&P 500. Looking at this table from 2013 through 2024, there are many years where monthly trends significantly outperformed the market, but what really jumps out is 2022.
Yeah, 2022 is interesting.
The S&P was down by a substantial 19%, but monthly trend actually had a positive return of 2%. That's a pretty powerful illustration of how this strategy aims to manage risk in different market environments.
It really highlights the potential for this approach to not only generate strong returns when the market is doing well, but also to offer a degree of protection when things take a downturn.
Right.
This contributes to the significantly higher cumulative growth we've seen compared to simply holding the S&P 500 over the same period.
And it's not just about the numbers on a spreadsheet, is it? You also have feedback from traders who are actually using this. They talk about things like the low risk, the steady profits, and how surprisingly straightforward it is to implement, even if they were complete newbies to options.
Yeah, that real-world validation is incredibly important to us. It confirms that the strategy isn't just theoretically sound, but it's also practical and providing tangible benefits to everyday traders.
So let's really focus on why this might be a good entry point for someone just starting their trading journey. It seems like there are several key features that make it beginner-friendly. For instance, the fact that you can get started with as little as $250 of risk per month. That feels much less daunting than some of the larger capital requirements you often hear about.
Absolutely. Our goal was to make it accessible to as many people as possible, regardless of their current account size. The defined risk and reward with bull-put spreads also mean you know exactly what's at stake and what you're aiming for before you even place the trade.
Right.
That 1.2 risk-reward ratio is baked right in.
And that average annual drawdown of under 10% has to offer some significant peace of mind, especially for those who are just dipping their toes into the market and might be understandably nervous about big swings.
That's exactly the intention. We want beginners to feel confident and not be constantly on edge about massive losses. Plus, with only 12 trades per year, just 1 per month, it's incredibly time efficient.
Yeah, 1 a month.
You don't have to be glued to your screen all day, every day. You set it up, and it runs for about 30 days.
Which also ties into the point about no bad fills or slippage, right? Because you're using those limit orders and you're not trying to execute trades at lightning speed.
Correct. The limit order helps ensure you get the price you're targeting, and the longer holding period reduces the impact of those very short-term price fluctuations on your entry and exit points. It's also a fantastic way to learn the basics of options trading by following a proven systematic approach.
And the flexibility to either fully automate the strategy or trade it manually is a great feature. So if you prefer a hands-off approach, you've got that option. But if you want to be more involved, you can do that too.
Precisely. And with only one open trade at any given time with monthly trend, it simplifies your risk management and also leaves room for you to explore other potential strategies if you choose to diversify later on. Also, this is a big one for many beginners. It's compatible with cash accounts because bull-put spreads are fully collateralized, meaning you don't need to trade on margin.
Oh, that's huge. That's a huge advantage for those who aren't comfortable or don't have margin enabled in their accounts.
Definitely.
And the fact that SPX options are cash settled eliminates that whole worry about potentially having to buy or sell 100 shares of stock if an option gets assigned.
Exactly. No need to worry about taking delivery of shares. And for those who are trading within a retirement account, like an IRA, The monthly trend strategy, because it primarily uses bull-put spreads, is generally accepted with broker approval.
Okay, good to know. Of course, it's crucial to have a realistic perspective on risk, right?
Right.
There have been periods of consecutive losses, with the longest streak being 3 trades.
That's an important point to underscore. While we have a solid track record, trading always involves risk, and it's essential for beginners to be aware of that.
So for anyone listening who thinks this might be a good fit for them and wants to dive deeper, what's the best way to get started and learn more?
Well, we offer a 30-day free trial, which is a great way to see the strategy in action firsthand without any initial financial commitment.
Free trial, okay. And if people have more specific questions, it looks like there's a really detailed FAQ section on the website. Are there a few key questions from there that you think would be particularly helpful for beginners?
Absolutely. One of the most common questions is about how much of their account they should allocate to each trade. As we've discussed, we recommend starting with 5% of your account balance.
Right, the 5%.
With the possibility of going up to 10% for those seeking potentially higher returns. Another frequently asked question is about the maximum number of consecutive losing trades we've experienced, which, as we mentioned, is 3.
3, okay.
Beginners are also often curious about why the SPX has historically tended to trend upwards, and we outline some of the key factors behind that, like overall economic growth, foreign investment, companies buying back their own shares, and the tendency for successful companies to remain listed.
Survivorship bias, yeah.
While less successful ones are removed. It's also important for people to know that the performance data we share is based on actual executed trades.
Real trades.
Real trades. With monthly trend, you only have 1 trade open at any time. Yes, it is suitable for cash accounts. There's no assignment risk with SPX options, and it's generally compatible with IRA accounts, though you should always check with your specific broker.
That's all really valuable information for someone who's just starting out and trying to wrap their head around all of this. So if you're looking for a potentially simpler and lower risk way to explore the world of automated options trading on the S&P 500, I highly recommend checking out advancedautotrades.com. There's a wealth of information there, including all the details about the free trial.
Definitely. We encourage you to visit the site, take advantage of the free trial, and see if the monthly trend strategy aligns with your individual trading goals and risk tolerance.
So as you think about taking those first steps or maybe a different direction in your trading journey, really consider the potential benefits of a consistent rules-based approach. What kind of confidence and peace of mind could having a defined level of risk and a strong historical track record offer you? Thanks for spending some time with us today. We're your hosts from AdvancedAutoTrades.com.
If you enjoyed this episode and want to stay ahead with fresh insights every other day, don't forget to hit that subscribe button or follow our podcast. We've got more exciting content coming your way, and we can't wait to have you back. See you soon.